The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, all you Bills fans. I'm Esther Gulius, the tax lady from EG Tax. All of our offices are open. It was touch and go this week with all the snow. Certainly a lot of snow, but boy, we are in there rooting for the Bills, right, guys?
Absolutely.
So I'm Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday. And Christopher Fabian.
Hello, Esther.
So you were there last week when they won.
I was there last week.
And you're going to be there tomorrow when they win.
I asked
Amen.
him, he wore 4 layers, and I said, was anything cold? And the only body part that he said was cold was his feet, because they were standing on a block of ice.
Yeah. Well,
cardboard would help.
We just really pray for the Bills. We pray for all of the team guys on both sides, but that nobody gets hurt, right?
Correct.
But that it is a good game.
Yep.
And of course, I'll be in the closet. So,
yeah,
all right, I'm Esther
Chris will be
Gulius, the
there
tax lady
again.
from EG Tax. Our website is egtax.com. We have 31 area offices to serve you. They're all open 9 to 9, Monday through Friday, 9 to 5 on Saturday. We close on Sunday for rest and worship. And if you have any questions, 8030930, 8030930, star 930 on a cell phone, 716-8030930 if you want to text us. Love to hear what you guys have to say. We got new things to share with you, but we've had Sue that's been waiting for a while, so I'm going to talk to Sue first. Hi, Sue. How can we help you? Hello, Sue? Hello? Hello, Sue. Sue, are you there?
Yes.
Okay.
Yeah, I am. Are you?
Yeah, I am. All right. What can we help you with?
Okay, Esther. I have a house that I've owned for about 30 years. And 6 years ago, I started renting it to my son, and I moved out. And now I want to either sell it to him or give it to him, or just something. Now, but I think I probably shouldn't have rented it to him and showed a rental on my tax. I don't know. And if I just owned it and didn't rent it, I understand I would be able to give it a one-time gift.
You can get. All right, let's back up. Okay.
Okay.
You can gift over $18,000, and then you do a gift tax return, and that'll adjust your unified exclusion. And if your wealth is under $14 million, really close to that right now,
yes,
you're not going to owe any estate taxes. So you do the gift tax return, and you show that you gave your son the house. You don't live there anymore, right?
No.
Okay. So if you gift it, then there is no sale. The only time you have to recapture the depreciation that you claimed is if you sell it. But if you gift it, then you don't have a problem. Now, he might have a problem when he goes to sell it, because his basis is going to be your basis in the property, adjusted for that depreciation. But if he lives in the house 2 out of the last 5 years, he's got an exclusion if he's married filing a joint return of $500,000. So it may work out.
So
Yes,
again,
yes,
if
you
you
wouldn't
gift
sell
it to him, you don't have to worry about that depreciation.
Okay, can I gift it to him and also hold a mortgage?
No.
that
If you
crazy?
gift it, a gift is a gift.
There would be no
If
mortgage.
you're selling it, then that's a horse of a different color. If you're selling it, then you're going to have to recapture your depreciation, and it's going to be a taxable event.
Okay.
Because if you have a mortgage, that means you're not gifting it.
Right.
Okay. So now, so that it was. So I mean, because I guess I didn't realize how much.
Well, how much is the house worth, Sue?
Well, the house is probably $200,000, and I only paid $70,000 for it.
All right, so it's $130,000 gain plus
The depreciation.
plus the depreciation. So I don't know what the
Well,
depreciation would have been.
What would you sell it to him for?
Well, I would sell it probably for like $150,000 or less. So that
All
would
right,
bring
so
it
she's
down.
going to have to do a gift tax return on the gift of equity, right?
Yep. Yep.
So you know what, Sue? Why don't you call us at the office so we can go over all the numbers with you, because it isn't fair to do it over the phone. You know,
Okay.
we can't ask those kind of personal questions. So the phone number at the office is 632-7886.
And call in
you
an
can just
hour.
call us and
Ask for Esther or Chris or
right,
Tiffany.
or Tiff, okay?
Okay, but at any rate, even though it's a rental, I can give it to him. I didn't know
Yes,
if
you
the
can
rental-
give anything. When it's yours, you can give it away, but you can't get any money for it
couldn't.
because then that's a sale.
Right.
But you
And
could
even
gift
though
it.
Even though I only rented it for 6 out of 30 years, I still whatever.
If you get
depreciation I
money,
have to-
it's not your personal residence. You had to live there 2 out of the last 5 years, so you can't take the personal residence exclusion. So now it's just the
Right.
sale of an asset. If you sell it, okay, then you're going to have to pay the taxes on the gain plus the depreciation that you claimed. But the good thing is, Sue, I don't know what your income is, but the maximum you're going to pay in a sale is 20% of the gain. So if the gain is $100,000, that's $20,000 in taxes. That's a lot better than no money. So if you give it to him, you won't get anything. But if you actually sell it, then and after taxes you end up with $120,000. That's a lot better than zero, right?
Yeah.
Yes, you're right. Okay.
All right, Sue.
Thank you very much.
All right, thank you, dear. Call us, we'll help you. All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. We certainly want to help you, and we're going to take a short break, and we're going to be back with John and Paul and a recent change to employee status just instituted and coming down the pike. We'll keep you abreast of that.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now, the bills are
That
making
is for sure. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we are rooting for the Bills.
So you're not going to watch the game, right?
No,
Yeah.
but I think I'll come to your house. Then I can play with your dogs, and it'll distract me.
Yes, you can do that.
All right, we're going to, and all of our offices are open. We want to help you. We actually talk to you if you call on the phone. You know, I mean, obviously you can go through our website and ask us a tax question via the internet, and I answer back. But it's so good to be able to talk to somebody because it's just like that lady that I just talked to. She was going to gift away the house so that she didn't have to pay $20,000 in taxes, right?
Right.
Sell the house, get some money, pay the taxes.
right.
Right? Okay, we're going to go to John. Hi, John. How can I help you? This is Esther Golias.
Hi, Esther. I have a few questions to ask you. My wife and I own several properties throughout the country, and we pay our taxes, our property taxes, with our credit card. And they charge a fee, like a 2% fee or 3% fee. I can't remember exactly what it was. But can we deduct that fee on our income taxes?
Under the rental.
Yeah, I mean, any expense that's ordinary and necessary is going to be a deduction. And as long as those properties are you're making money on them, that you're trying to make money on them, that they're business motivated, then any interest that you pay is going to be deductible as a business expense on your Schedule E. Okay? It would not be deductible on your personal return because it's not a bona fide expense that you could take as an itemized deduction. Are these limited liability companies, John?
No. We own them. Me and my wife just own them. We're not a corporation.
But you're not an LLC.
Are you renting them?
Pardon me? Yes, we're running them. Yeah.
Okay.
Okay, so business motivation, yeah, you can take your 2%.
I went to an audit for a rental one time, and there was a person who had like $60,000 in property taxes in 1 year on her rental, and so they called her in for an audit, and the part of she was paying behind property taxes, and we also deducted the fees. You can't deduct fees for
Because that's punitive.
but
the interest is different.
Yep.
So, yeah, good question, John.
Now, I got another question.
Yeah.
Some of these properties we own are in Las Vegas, and so we travel to Las Vegas quite frequently to take care of them. And I know we can write off the airfare for that. But when we were out in Las Vegas last year, I won a lot of money. I won like $150,000, and I got my win-loss statement. And then after the losses and everything, it came to like $122,000. So my question is this: can I deduct the airfare and all the expenses, and can I deduct the tips that I gave the employees when I won?
All right. First of all, the income is taxable. Number one, the expense is deductible as a miscellaneous itemized deduction. Okay. And as far as the trips going to Vegas, if you're going to Vegas because of your rentals, it has to be ordinary and necessary. So you want to be very careful if you're going to Las Vegas a lot and you have 2 rentals and they're brand new houses. You cannot. I don't think you could justify going there that much because it's really not ordinary and necessary. It's more personal. So you have to allocate how much really was business motivated and be able to prove it. You guys agree with that?
Yep. Yeah,
sure.
Yeah, well,
most definitely.
Yeah, I don't deduct all the trips that we make. I only do maybe half.
Okay.
Well, how many is half?
And then when I'm out
No,
there,
John, how many is half?
Like
probably
5
about,
times a year.
Yeah, 5 times a year. I usually put down 3.
Okay.
But I always have.
But can you prove that you have a business motivation when you go out there?
Oh, yeah, because I got receipts like from Lowe's and stuff
No,
like that.
I mean, all right, so you're doing repairs and things.
Right.
Yep.
Okay, and that's really what you'd have to do because, I mean, I've been on audits where the auditor says, you went to Hawaii? You have a rental there? And you went in February to Hawaii?
From Buffalo?
And you're from
But it was
Buffalo,
cold here.
and you want me to believe you didn't go have a good time? But that's part of what you have to do. You have to prove what you did there in order to take that as a business expense. And really, 2 of you don't really need to go.
Well, okay, but she helps me. But anyway.
Well, I mean, again, you have to prove it that, and actually, I've seen it go so far as if it would have been cheaper to hire somebody as opposed to taking the travel expense. You remember, you have to it has to be ordinary and necessary.
So John wants to know if he can do the tips as a back off on his gambling.
What do you think,
Right.
Chris?
I would say no. There's
I
no
would
record.
say no as well.
No, John, no.
Right.
Well, I mean, they tax the people that make the tips. I mean, they.
I know, but you remember what happens to them has nothing to do with what's deductible to you. Yeah. Everything that you do has to be ordinary and necessary in order for them to be deductible. Now, there's another stipulation in the law that says that if you traveled for gambling, and you made money, those expenses are also deductible, right, guys?
Yep.
Yep,
So
your
there,
flight, your hotel, if you
there's-
stayed
Right,
at a
so
hotel.
that's a
There's
horse of
something
different colors.
you
So if
can
you
use.
actually made money gambling, you might not be able to take it on your Schedule E, but you might be able to take it
As an offset.
as an offset on your federal return.
Well, that's what I was thinking because I made like 5 trips. So I was thinking maybe putting 2 on for.
Well,
the
you have to really look at it realistically. When you were there, what did you go for? If you went to gamble, that's one thing. If you went for taking care of your property, that's another.
And if you were there,
and then at night we go out and gamble.
Well, again, you have to prove it to an IRS agent who's been freezing
With
his
the
butt off
receipts.
here in Buffalo. So you want to back up everything as best as you can because they're back in the audit business.
Okay. Yeah, I got one other question too. My aunt passed away about 10 years ago, and she left me a house, and now we're going to sell it. Now, would I get hit for all the capital gains?
Did
on
you
that?
inherit it or did she gift it to you?
Inherited it.
All right, so you get a stepped-up basis, fair market value at the time of her death. How much was it worth when she died?
I think about $60,000.
And what did you sell it for?
Well, I'm selling it now for like $120, but I put like $30,000 into it.
All right, you get her adjusted basis, her stepped-up basis, plus your repairs that you incurred to sell it, plus the expense of sale against what you're selling it for. So you probably won't have that big of a gain.
Good news.
Good.
Okay, John?
Yeah, great. Thank you so much.
All right, thank you.
Thank
Go
you.
Bills!
Yeah, right.
I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930.
No.
And I'm going, no,
Wait,
yeah, Chris.
I have a question for you.
I don't want to answer it.
Okay, but
your
it's
questions are going to be really hard.
No, you asked John if he was an LLC with any of these properties.
Oh, good point.
Why would you ask him that?
Because if John had an LLC on his rentals, or if anybody that's listening has a limited liability company, small business company, or if anybody listening has an 1120S, and you have less than 20 employees, then you have to register with the Financial Criminal Division of the Department of Treasury under the BOI requirement. So if you're getting
Big
benefit of
Brother's
ownership, beneficial ownership information has to be reported to the Internal Revenue within 90 days, or to the FinCEN, 90 days of you becoming one of these entities, or if you've already were an entity before 2024, you have time during the 2024 year to do it on an old one. So otherwise, the penalty can go up to $10,000 for failure to file that.
Big Brother is watching. And Esther,
So,
did they
Chris,
mail you?
I mean,
did they
you
mail
wanna
you?
add to it? Pardon
Did they
me?
mail you a note saying you have to do this?
No.
No letter.
No notes, no nothing. It's just it was passed in 2021 under the Transparency Act, and yeah, and so it went into effect on January 1st
Of this year.
So if you registered your business with a state taxing authority, so you incorporated, you became an LLC, and you had to register it with the state, whether it's New York, Nevada, California,
Florida, right.
wherever, you have to do this.
Right. And
By
if
the
you
end of-
don't,
Yeah.
what? And if you don't,
Sorry, if you
10,000 up
don't,
to 10,000.
it's a $500 a day penalty up to $10,000.
Right.
And you have to December 31st
if it was an existing.
if it was an existing.
Before 2024. But if your new LLC, your new 1120S, your new partnership is less than 19 employees, you have 90 days to do it in 2024. And starting then on the 91st day, it would be a $500 per day penalty until it gets to $10,000.
Right.
So if you want to check it out, go to BOI FinCEN, and you can read about it, and we will help you.
Also, if a shareholder passes away or shareholders change that are more than 25%, you have to do this. You have 90 days to do it as well.
And if you have, let's say you got like this guy that just called, let's say he had 6 rentals and each one was an LLC, he has to register 6 times.
Yep.
You want to talk to Paul before the
I
break?
do want to talk to Paul. Hey, Paul, how are you, sir?
I'm good. How are you, Esther?
I'm
Thank
great.
you for taking my call. I recently had a electrical service panel installed, and I forget where I heard it, but I understood there to be a $300 to $600 tax credit for installing a new service panel. Do you know anything about this?
Right, Chris, you want to tell him?
Well, I'm Googling that one. I mean, I know I don't think there is with an electric
Anything
panel.
to
but-
reduce or eliminate heat loss.
There is a credit if you buy an EV and you have the electrical panel, you have the electrical to
Charging
charge the EV, but not if it's just an upgrade to your electrical.
panel.
But I will
okay.
tell you that for people that are listening, there is a brand new energy credit which can save you up to $1,200 in taxes for Energy Star furnaces, hot water tanks, insulation, storm doors,
front door, garage door.
yeah, garage
water
doors.
tank, furnace.
All that, I
yeah.
did all
Rules of
that
insulation.
last year. I did all that last year.
And then if you put in
heard that-
biomass stoves or some of the other high efficiency stoves, that's another credit that could be up to $2,000. So
wasn't-
$3,200. And for the first time ever, if you're a renter and you put in the Energy Star air conditioning furnace for your landlord and they didn't pay you, you now qualify for this energy credit.
And Paul, it wasn't geothermal that you did, right?
No, just a regular electric panel. But like I said, I thought that I heard somewhere, I forget where it was, that there was a tax credit offered last year.
Only if it's for EVs.
Oh, Chris has something to say.
Wait, yeah, Chris.
No, under Energy Star, it is a $600 credit, up to $600, 30%
For a new electrical panel?
for a new electrical panel.
I'm
I
incorrect.
think he should call you.
Great.
Oh, okay.
Has a
Well,
load capacity of not less than 200 amps. It is installed in conjunction with and enables the installation and use of any qualified energy efficiency improvements or any qualified energy property, heat pump, water heater, heat pump, central air conditioners, water heaters, furnace, or
but
hot
you
water
see,
it
boiler.
has to,
Form
it has to be
5695.
used in conjunction with that, Chris.
With it, right?
So you would have had to done the other things too, Paul.
All right. Okay. All right. Well, that clears up that confusion.
All right. Thank you, Paul.
All right.
Go
thank you.
Bills.
Yes, go Bills.
All right. Bye-bye. Okay. Thank you, Chris, for
Frank is
looking that
taking a
up.
break.
There are for the new energy credit, there are so many stipulations, and each thing that you did has a certain cap. So it's 30%, but some of them are limited to 300, some of them are limited to 200. So we can help you with that too.
Yep, and there's a text and a phone call when we get back.
Okay. Oh, I got a break for news. I'm Esther Golias, the tax lady. See you on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now, the bills.
And we're going to be watching the game. Not me. I'll be praying someplace in a closet. I'll tell you. And Chris is going to go. You're going to go to the game.
I'll be
right?
there. I'll have no voice on Monday.
Right. I hope.
Gracie
hope.
Gracie made signs. They're so cute. She's got lots of glitter and pictures and
We are hoping.
stencils.
We are hoping, right?
Yeah.
All right. I know we got a couple phone callers holding 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we got a text.
Yep, it says, if my LLC does not collect sales tax, do I still have to register for the BOI that you're talking about?
Yes, sirree, Bobby. So
As
if
long
it's
as
a
it's active.
pre-existing LLC, you have this whole year to do it. And you would go to BOI FinCEN. There's a website, and you log in. You have to make a copy of and send up to them a picture of your driver's license or passport, and everybody that is a member of the LLC, and again, you'd have to have less than 20 employees, has to be registered with the BOI, benefit of ownership.
Yeah. Now the only
information.
caveat would be is if the company is not active, if it's not doing business, if it's been sort of stagnant
Right.
for the last few years.
Right,
You don't
right.
have to
But
do
yes,
that.
you have to do that. And again, if you're a brand new LLC, brand new 1120S, brand new partnership, brand new, what am I missing?
LLC Partnership
LLC,
Corporation.
Self-employment, you have 90 days from the time that you started that entity to register, or else the fine is $500 a day till it gets to $10,000, and it's not too many days, right?
No, that's 20 days.
Yep, so not a long time. I know I got calls, but I wanted to talk about this. Why is it that people pay people that work for them that have businesses on a 1099?
Well,
Jeff?
Because they don't tell them when to come and go. They don't tell them when to come and go. They don't give them
You
the
think
tools.
that's why? You think that's why people
They
do that?
don't give them the
When you're
tools.
when you're a small business, you think people pay them because on a 1099 because they don't exercise control?
I think
That's-
they
that's-
do it
that's-
to
well,
avoid paying.
Right, but that's the reason you're
bingo.
supposed to
They do it
it
to avoid paying
like I said.
taxes and getting the workers comp and everything, right?
Yep.
Well, How many days ago did they just change the interpretation of the 1099, Chris?
Oh my gosh, that was about a week ago.
Right. And so now, if you are somebody that is getting a 1099 and you're not on a W-2, they are just reclassifying and looking into auditing everybody that's on a 1099 and reclassifying you as an employee. Now, you should let your boss know, because when are they going to put this in effect? March
11th.
Right. So if you're on a 1099 and they tell you when to come and go, and they tell you how much they're going to pay you, and they're providing you with the tools to do the work, like maybe a hairstylist, maybe a nail salon person, they're going to come after these people and make you pay them what you didn't pay them in wages. They're going to make you pay them back, and you're going to have to do the workers' comp and all the insurance, and that's a brand new change. And they're specifically looking at Uber drivers, Lyft drivers, and
DoorDash.
DoorDash, Instacart. Now, the problem with those poor people, I feel bad for them, because as an employee, if they make them an employee, you might think, oh, well, good, they finally are going to get their just rewards. But can they take their expenses for their gas and oil and their car and all that stuff, Chris, Tiff?
Right. As an employee, no. And that's the thing, where an Uber driver right now, we'll say, makes $20,000. Then you back away their Uber fees and their mileage expense and their cell phone and anything else. They may end up with $1,000 profit, or maybe even a loss on their tax return.
And they don't pay taxes.
They don't pay taxes.
So that's the way the law reads. If you're self-employed on a 1099, you can take your expenses. If you're a W-2, you can't take your expenses. Mm-hmm. So this is something very interesting. I just was reading an article the other day that Uber says they don't think they got a problem with it. But believe me, as of March, they're going to be looking at those people on a 1099. And if you're somebody paying your employees on a 1099, change to a W-2 to avoid the penalties.
Right. And this is a federal law. It's not a New York law. Biden signed it into effect. And it's, they're going to go after. It may not be March 12th, the person's going to say, guess what, you're an employee. It may be until they come knocking at their door.
Right. Remember, so it's the Department of Labor.
Yep.
That is going to institute this. And so if you're a 1099 employee and you're working for somebody, you should really clue your boss in, because they could be saddled with all kinds of penalties and interest.
Yep.
Okay, and I'm going to go back to the phones. We're going to talk to Joe. Hey, Joe, how can we help you, sir?
How you doing?
Good.
I have a quick question about payroll tax.
Yeah.
Has there been a change, like a new deduction? And the reason I ask, like, say I make 40 hours, I bring home $700. Now that same 40 hours gets me $675.
Okay.
Did they change the withholding tables, Chris?
Has there been a change to the withholding?
Yeah. Because the withholding,
Did you get a
the
bonus?
tax liability has actually been stretched out on each of the tax strata. So you're 10, 12. You're paying less taxes on more income. So that would mean that they changed the W-4 and the withholding. But you can always change your W-4 back to however you want it. And I would suggest that you do that. So when you're doing your taxes this year, change your W-4 as well.
Yeah, your health insurance might have went up. There could have been other things. You really got to look at your pay stub to see what changed. Because
that's why I know that was different, because I compared the one from last year that had the same amount of hours to this year, and it was a noticeable difference.
Right, but did you go through line by line to see, was it the federal, was it the state, was it your health insurance, was it your New York State family leave, was it, there's so many different things.
I gave it a quick glimpse, but I didn't itemize each thing and look at it that carefully.
Right, because your take-home pay is very deceiving. But again, going back to that W-4, you're in control of what they withhold. So if you need help with your W-4, or even right now we still have some time to help you, you can just kind of fax us in or take a scan of what you got, the 2 pay stubs, and we'll tell you what the difference is.
No, I'll be in. Dana does my taxes now.
Oh,
I called
all right,
at
then
the
you're all
beginning of
set.
Last year because I had my stuff hacked by TurboTax. I don't know if you remember that in January, but I had to file New York State twice. Dana helped with that. She was very helpful. So I was just curious if there's been a change because everybody at work is like, we got a new payroll company, and we're all like,
Well, and that's another thing. You know, that's another thing. Your payroll company, did they ask you to fill out a new W-4?
they did not.
So, yeah, when you see Dana, she'll help you.
Okay.
Thanks, Joe.
Good question.
Go
very much.
Bills.
Go Bills.
All right. I don't want that. I got to do that. There we go. And we're going to go to Brett. Hi, Brett. How can we help you, sir? Hello? Hello, Brett.
I can
Are
sort of
you
hear
there, Brett? I can hear little things. You're not there?
Put him on hold.
I'll
We'll
put
keep
you on
going.
hold. All right, and we're going to go to Tom. Hi, Tom. How can we help you, sir?
Yes. Me and my brothers and sisters inherited a lot in Florida,
Okay.
a vacant lot. And on the close of the sale, we all had to list our Social Security numbers.
Uh-huh.
What kind of form would I get for that? I mean, we ended up with, let me put it this way, because we sold the lot in order to pay off my mom's final expenses.
Mm-hmm.
And we only ended up with like $3,000 apiece.
Uh-huh. But you inherited the lot, right, Tom?
Yes, we inherited.
So you're going to get a stepped-up basis, which is basically the fair market value upon her death. So how soon after her death did you sell the lot?
About 5 years.
Okay, well, a lot happened in 5 years because the property values in Florida went through the roof.
Mm-hmm.
So do you know how was it appraised when Mom passed away?
I think I know because I was paying the taxes on it, but it was probably worth $20,000 or so. When
you sold it for how much?
40.
All right, so you're going to get your basis is going to be $20,000 plus any expensive sale, plus any improvements that you made, which I'm assuming you didn't do much on a vacant lot. That's going to be so. Let's just assume that the cost basis is $25, and you sold it for how much again?
40.
40. So you got a $15,000 gain. Split how many ways?
3.
6 ways.
Okay, so everybody's going to get a little teeny 1099-S form, and you're going to do it on a Schedule D, and the difference between your adjusted basis and what you sold it for divided by 6 is going to be what everybody pays in taxes. So it's not going to be much.
Okay.
If anything.
So I still have to wait for a form for that, right?
Yes, sir.
Okay, thank you very
You're
much.
welcome. Thanks for calling.
Good question.
Okay,
All right, go Bills. All right, let's see.
Brett?
Brett's back. Hi, Brett.
Hi, how you doing?
I'm good.
I got a question on inheritance.
All right.
I lost my dad last year, and me and my brother, we were finally doing settling the estate. And my dad owned a house, and he owned his own business. And I'm holding the mortgage on the house, and I'm also holding the mortgage on the house. What kind of taxes I'm going to be paying for?
So you sold the house and the business?
Yeah, and I'm holding the mortgage on it for him.
For who?
For the purchaser.
For my brother.
Oh.
Okay. You're going to have to back me up here.
So,
Yeah.
okay, so Dad's house, you get the stepped
Dad's
up
house.
basis. Okay, so what it was worth when Dad passed away. So
When did Dad, you said he died this year, right, Brett?
23.
Okay.
So then you're probably not going to have any gain to report for the sale of the house on the you have to do what's called an installment sale since you're holding the mortgage. But the interest you're receiving, you're going to have to pay tax on that interest.
From your brother.
For you and your yeah. So your brother bought it out?
My brother bought my half out.
Okay.
And so that's what you're holding the mortgage on.
That's what I'm holding
And
the
you are
mortgage on,
charging him interest, right?
Yeah.
So the interest is taxable, but because it's a stepped-up basis, there's not going to be any gain for you on your tax return anyway. And then, did you say you sold a business?
My dad owned his own. Yeah, my dad owned his own business.
What kind of business?
Automotive.
All right. So,
And did you
what
sell
happened
it?
with that? Did you sell that?
We sold that, and my brother bought my half of the shares out.
So you sold your brother bought the business out from you then?
Yeah.
So
and I'm holding the mortgage on that too.
Okay. So again, how did you come up and determine what to sell it for?
We took just the inventory. We took the value of the inventory, and that's what we sold it for.
All right. So just the inventory.
Correct.
Okay. So your dad's inventory you inherited, and you took half of it. So again, that interest is going to be taxable.
Was Dad's business a
I
corporation
was just thinking about that.
or a
1120
DBA?
It was 1120. Yeah.
So
All right,
you
got to
sold
make
your,
sure you register with what we were talking about, the BOI. Well, your brother's got to register with the BOI FinCEN by the end of the year.
right, but you sold your shares of stock to your brother.
Right.
Correct.
So then you have to report that sale on a Schedule D.
And the interest.
On my personal taxes.
Yes.
And then what's going to happen with my dad's final tax return?
You have to.
You're going to do a final tax return based upon your dad's income for 2023. How soon into the year did he pass?
He died July of 2023.
So he's going to have a half a year's Social Security,
Business.
the business. You're going to have to do the corporation,
He'll
the
get a
corporate
K-1.
return, and there's going to be your dad's share and then your brother's share.
There's going to be.
Is there any
K1.
other shareholders besides your dad?
No, just my dad. My
All
dad
right,
was
so
100%.
so then you're going to have your dad's share of the corporation that's going to go on his return, and your brother will get the rest.
Because he took
It's
it
going to be
over.
a crazy tax year
Right.
for you.
Yeah. Yeah, it is.
My brother will get
Lots
the
of
rest.
moving parts.
Okay, Brett?
All righty. Thank you
All right,
very
sorry
much.
to hear about your dad.
All right.
Go
Thank you
Brett.
very
Thank
much.
you.
guys have a great
Bye-bye.
day. Bye-bye.
All right, I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we're going to be back with your calls on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now, the bills are
All
making
right.
it happen now.
Tomorrow's a big day.
Very exciting.
Big day. I think to myself, maybe somebody knows why. Of all places in the world to not have a covered stadium.
Because it
Right?
makes it
I mean, the
more
worst.
genuine.
I mean, it is the worst weather in the whole football league is in Buffalo, New York.
Yeah.
No.
Oh, who has worse
Green
weather?
Bay.
Green Bay.
No, it's cold there, but it doesn't have snow. Snow is so debilitating. I mean, you can't move around in it. And when it's 12 below zero, you can at least bundle
But
up.
it's cool to see all the camaraderie, everybody
But
coming together and
I
shoveling.
was watching videos and the players were saying they don't like playing in domes. They like playing in the weather because
Okay.
that's what football is.
I don't know. Okay, I don't. I don't agree. All right, we're going to go to Don in Cheektowaga. Hi, Don.
How you doing?
I'm good. What's happening?
I got two questions for you.
Yep.
I gifted my daughter some money to buy a park model out of state. Does she have to claim anything, or do I got to claim anything?
All right. How much did you give her, Don?
$90,000.
Okay, so you have to do a gift tax return. It's not going to cost you anything. It's just kind of an informational form that the IRS gets, keeping track of how much you gave away. When you give away more than $18,000 a year, last year it was 17. You have to do the gift tax return. Is she married?
No, single.
All right, so you're going to do the gift tax return. It's not taxable to her. It's not deductible to you. You're doing the gift tax, no taxes, but it's all information that you're going to send to the IRS.
Okay. And my second question, I heard a caller say, we're getting ready to sell our house and buy another house in another state. The house that we were selling was an inheritance that I got from my dad when he passed away.
How long did you live there, Don?
since 1998.
Okay, so because this was your personal residence, are you married?
Yes.
The first $500,000 of gain will be tax-free.
All right, so I don't have to worry about.
I mean, you got to report it,
pay
but
taxes on it.
you won't have to worry about taxes. Yes.
All right, I appreciate your
All right,
help.
you're very welcome. Go Bills. Talk
Go
to you
Bills.
later. All right, and then we got Chuck from Lockport. Hi, Chuck. How can we help you?
Hi, this is in regards to the BOI reporting. I was going through the document for small compliance, and there's a flow chart indicating which companies are reporting companies. My company is a sole proprietorship in New Jersey.
Okay.
And I had to fill an online form.
But is it a sole proprietorship LLC?
No, it isn't.
All right, so it's just a sole proprietorship.
Right, but
You
the
don't
flow
have to do
chart
anything.
doesn't. It says, is the company?
You didn't register it with New Jersey.
New Jersey, right?
With New Jersey tax, yes.
The State Department of New Jersey, not collecting sales tax, but through the Department of State.
I had to register in order to pay Social Security.
No. That's okay. So there's all bunch of different kind of taxes, but the limited liability company is where Chuck contacted New Jersey and said, I want to make sure that only they could, if they sue me, they can only attach the assets of the company. That's called the limited liability company. If you have a limited liability company, then you fall under this BOI FinCEN thing. If you're just a sole proprietor, that are paying sales tax and payroll taxes, you don't have to worry about registering. But if you're concerned, give us a call and we'll take a look at what kind of return you filed last year, or we could call New Jersey and find out.
Okay. It's
Okay.
just that this
I mean, it's $10,000. It's worth looking into, right?
Okay,
All right.
there are other exceptions in this flow chart. That's all.
Oh yeah, there's all kinds of exceptions. If your business, many financial institutions are exempt, charities are exempt, and if your business is out of business, it's also exempt. So there's all kinds of things. What we want to do is get people to look into this, because if you don't know about it and you had to register, we wouldn't want anybody to have a $10,000 fine. Okay, Chuck?
All right, thanks.
Thank you, sir. Appreciate your call. Okay, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we got no more texts, right?
Nope.
Okay.
You were going to talk about the New York State change.
Oh,
for
there's a big change for if you have babies. New York State finally is going to let you get the Empire State Child Tax Credit for children birth to age 4. Before, they said you had any kid that was under the age of 4 till 17 couldn't get anything.
Bizarre.
Now it's birth to 17. so that's
bizarre.
big.
No, it's normal. That's great.
Right. That's
very
correct.
great. And then also, on the break we were talking about what's the definition of something like a hairdresser? When can they be a 1099 and a W-2?
They have to be independent. So they have to be responsible for their own profit and loss.
Bring their own
They
tools.
have to have a substantial investment. They have to that their work performance is not intricate to the person that they're working with. All right, they exercise their own control of their business.
Right.
The work performed is an integral part of the employee service and their skill and initiative. So when you're self-employed, they're not. You're bringing in your own business.
So
right.
So Uber, that sounds like a lot of Uber drivers to me.
Well, I know. I think Uber, when I look at it, because of the cost of they have to buy their own car and gas. I mean, how much more?
Well, the difference in Uber is the person who is the Uber driver doesn't go and solicit business. They get it from Uber.
That's true.
And that's one of the big criteria.
Right, that's true. And Uber, and I understand Uber says you have to have a certain kind of clean car and all that kind of stuff too.
The text says, I have my country property in an LLC, no employees and no payroll, 3 equal partners, do we need to register?
Is if it is a business,
right,
and you've collected rent, yes. If there's no income,
no activity, no problem.
Correct.
And so if it's just a
good question,
siblings,
I really want people to pay attention to this because you don't want to get a $10,000 fine.
Big Brother's watching.
Yeah, really, for sure. And the same thing if you're the 1099 employee thing. That's something that's coming down the pike in March. So we want everybody to have fun, though, tomorrow and stay bundled up.
And then don't forget our offices are open, and you'd call 632-7886 to make an
go to our
appointment,
website
or
at
go to our
egtax.com.
website. Yeah.
And if you need any help, we're here for you. We certainly want you to know that we're in your corner. So anyway, till next week, God willing, now if we win this thing tomorrow, what are we?
Then we play next Sunday.
Semi.
We're in the semifinals.
And either Texas will come here,
or we go to Baltimore.
Yeah.
Texas would come here?
Yeah, right.
Well, that would be so
Well, they
fun.
already are. Bum. Sorry, that's getting too political.
All right. I'm Esther Golias, the tax lady, with Tiffany Fabian, Christopher Fabian. We appreciate your calls, and go Bills.
Go Bills.
Thank you. Bye-bye.